Today's guest is Michael Bentley, the co-founder and CEO of Euler. Euler is a non-custodial lending protocol built on Ethereum that allows users to lend and borrow almost any cryptocurrency asset. He is the CEO of the project, and Euler has raised about $40 million from institutional investors. And prior to building Euler, Michael wrote his PhD, did a PhD on dynamical systems. He wrote a thesis, dynamical systems theory of natural evolution. So we talked about Euler, what they're building, why they're building it, the process of raising money. We talked about natural systems and the corollaries or patterns between natural systems theory and free markets and crypto. Fascinating conversation. I hope you enjoy. And if you do, please let us know on social media and help support the show. Here is Michael Bentley. All right, Michael. So we're live. Thanks for hopping on today. I'm really excited to chat with you. You're running a protocol company, Euler, now. We were talking a few minutes ago about the origin of the name. I'd love to hear maybe a little bit about that and what you were doing at the time when you realized that this is something you wanted to jump into, and how you specifically saw this opportunity in comparison to all the other things you could have been doing with your life. What was it about this that got you so excited?
Yeah, really good starting question, a tough one as well. Firstly, on the name, just a really short bit. I pronounce it Euler, and it was named after a mathematician, a very famous mathematician that lived in the mid 1700s. He was studying compound interest, and as we'll come on to later, the kind of thing that we've built, this protocol that we've been building, allows users to lend and borrow assets, and in the process of doing that, compound interest is earned, and so there's a connection there between the name and this hard to pronounce name Euler, when it looks to a lot of people like Euler, and what the protocol does. So yeah, I don't mind if you call it Euler, by the way. Everybody, 99% of people call it Euler. I pronounce it Euler. So bit of background on that. How did it all come to be, though? How did this all come to happen? Yeah, I used to be, if we roll back to 2020, I used to be an academic studying evolutionary game theory in Oxford, and my wife was pregnant at the time, and it was really right at the start of 2020, before the pandemic had sort of kicked in, and I was going to events at the Oxford Blockchain Society, and playing around with ideas about building stuff, and just participating in hackathons, really. And shortly after that, I came across Compound Protocol, which is a lending protocol on Ethereum as well, and I was really excited. It was one of the kind of moments I first thought, this is really, really cool, and I sort of read the white paper and really got into it, and started thinking, oh, hold on, there's bits of this that I would probably do differently, and I had a few ideas about how to set interest rates in different ways and so on. So I started to pursue that in the course of this hackathon that I was in, and met a few other folks who were building little hackathon projects around lending protocols as well. And we got talking, and eventually we sort of combined various ideas, and that was the first nugget. That was where Euler, in its kind of early phase, was born, was just in this hackathon.
Mm. And specifically, the ambition at that time was to build a modified, decentralized exchange similar to Compound, but different in some fundamental ways.
Yeah. So there were, I think it was even less ambitious than that. To be perfectly frank, my goal was to win the hackathon prize, which I think they were offering a couple of £1,000 for the winner, and I thought, if I can build something cool, I can win this prize and maybe buy a cot or something for the baby that was on the way. So that was my ambition initially, and it started to grow beyond that once we realised we were onto something. My idea was around how you set interest rates in a decentralised way without somebody, some kind of bank manager or economist coming and tweaking things. How do you set them in a completely autonomous way, just through protocol code? And in particular, there was a branch of maths I'd studied before called control theory. I thought this could be really useful in how you control these interest rates and how you set interest rates in a decentralized way. So that was the hook for me, was in setting interest rates. And my now co-founders, they were really interested in this idea of a permissionless protocol. One of the things that Compound was doing was kind of limiting the types of assets people could lend or borrow. They were just limiting it to, I think, 5 or 6 assets at that time, a really small number. And at that time, there were a few other protocols springing up, like Uniswap, that were permissionless, and you could list any asset. And so the question there was, why can you not do the same for lending that you can do on a decentralized exchange? So we started tossing around ideas about permissionless lending and borrowing systems as well, and why it's a hard problem. What would be the benefits if you could enable that kind of those kind of features on a lending protocol?
And what is control theory, and why was that particularly inspiring to you to maybe implement on chain?
So control theory is it's a branch of maths that involves what are called dynamical systems, which are systems which kind of change through time, and processes that change through time. And usually in control theory, you think about there being some kind of input that you have into the system that means that you can influence the way that it changes through time. And how is control theory used in the real world? It's using things like the thermostat in your home, for instance. You have some external process like the temperature outside changing. It's going up and down all over the place through the seasons. And the thermostat is constantly measuring the temperature outside, but it wants to keep a constant temperature inside the house. And so there's a control mechanism there which measures the difference between the temperature outside and the temperature inside your house. And then it essentially kicks in by turning up the heating or turning on the aircon or whatever to try to influence and maintain a steady state in terms of the temperature inside the house. And so, it gets applied a lot in those kind of contexts. A lot of engineering systems where you want things to be nice and stable. And in interest rates and lending and so on, what you really want to be stable is the amount of borrowing in the system. If you don't have any control over the interest rates, you can often really underprice the cost of borrowing or really overprice the cost of borrowing. And that generally leads to inefficiencies in the system. Like capital gets poorly used if the cost of borrowing is really high. Then you get low, no one's really borrowing. If the cost of borrowing is too cheap, then the lenders lose out. They're not getting the returns that they should be. And so you get all sorts of problems with that volatility and inefficiencies in the system. And so it'd be much better if you could kind of control the amount of borrowing that was happening such that most of the time you get a fairly consistent return on the assets that you're lending in relation to this outside market, which is super volatile.
So the general inputs to the system, akin to the temperature of the outside of the house, by analogy, here would be the current level interest rate that's on the platform, on the exchange, the amount of, what would you say, the amount of, I guess, capital that's already lent out in the system, what else would you pull into the system to have an input to then try to optimize the stability of the borrowers?
In our system, you're really fortunate in that you can use really just one input, which is to measure how utilized is the capital that's being lent out. What I mean by utilized is like what fraction of the amount that's being supplied for lending is being used right now by the borrowers. If it's 10%, well, that's not very good. I mean, there's 90% of capital that's not being utilized there. So that's bad news for the lenders. Something's wrong there. The cost of borrowing is too high, presumably. Mm-hmm. If the fraction that's being borrowed is 100%, well, that's also bad news for the lenders. It's a kind of a signal that the interest rate should be higher so that they could take on more. And also, when there's 100% of borrowing from the system, it means that a lender that wants to come and withdraw their funds from the system can't, because, of course, their funds are being used by somebody else out there. So you always really want to have maybe 80% or something utilization of the capital that's being supplied by the lenders. And so that's really your target, and you can measure essentially how close are we from right now. What's the utilization? How close is it from this target utilization? If it's higher than it, then okay, there's a problem with the cost of borrowing being too low, so we'll increase the cost of borrowing and disincentivize more borrowing. If it's lower than the current target utilization, then we want to incentivize more borrowing to get more efficiency out of the capital. And so the system can essentially just lower the cost of borrowing to stimulate more.
And how dynamic is the interest rate change? Is it a linear decrease of interest rates over time, or is it correlated to time where there's it's kind of testing the rate at which the borrowers respond to the changes in the interest rates? Because I imagine it's not the system's not the reaction of the borrowers are not consistent over time. Sometimes I imagine interest rate changes a little bit and nothing happens. Sometimes it changes a little bit and demand kicks up. Is that factored in, or how complex is the math around the dynamical interest rates?
I'd say it's actually fairly simple, especially in control theory terms. It can be a very advanced topic. I think this is probably day one of a control theory or controlled systems course for an engineering class. So it's pretty simple, and usually they're the best types of models, to be perfectly honest. Especially when you're using a model that has to perform out there in the real world, especially on something like a blockchain where you have concerns around the complexity of the calculations and the efficiencies of the calculations. You don't want to spend too much on gas. Things have to be simple. And so I would say it's relatively simple. There's a few nuances to it that are implemented in this system. One is that the further you are away from the target, the faster the interest rates will increase. So it might be that if you're right next to the target, but slightly above, the interest rate will maybe increase by a fraction of a percent a day. So it's going up quite slowly, and eventually, hopefully, that will kick in and bring it, just put off at the very next borrower to bring it back to the target. However, if the current utilization is 100%, so it's about as far away from the target as it could possibly be, at that point you have some seriously steep increases in borrowing per day. You're looking at 10% increase per day or 20% increase per day. And so it's really ramping up at that point. And what you expect to happen in that situation is the existing borrowers really start to feel the pain, and some of them start to repay their loans. And equally, new lenders out there looking for a good deal are seeing these incredible interest rates and thinking, I'd like a piece of that. And so they bring on board more supply as well. And the combination of those two factors helps bring down the utilization back towards the target.
That's interesting. What are other things you think about when you built this? Like, one thing that comes to mind would be the percentage of collateral that somebody would need. In DeFi, you need to stake money to borrow money, which is different than traditional finance, where you can just borrow it based on your credit with a threat of, banks, chasing you if you don't pay them back. Here, in my understanding, most exchanges and most cryptocurrency combinations have some percentage of margin, some percentage of collateral that you have to stake. That's 100% or more. How is that determined? Do you have to kind of subjectively evaluate the risk of volatility of different currencies, or is it more simply or mathematically done?
So for specifically the last part there, asking how much can you borrow basically? If I put in $1,000, can I borrow 500 or 800 or so on? On our protocol, it's done on an asset by asset basis. So every asset has what's called a collateral factor, which determines how good it might be as a collateral, like how reliable is it. So things like USD or the comparable things like USDC have high collateral factors. They're kind of judged to be useful assets as collateral, and that's because they're stable and they're very abundant. So that the risk associated with these things kind of changing in price is extremely low. Anything that's really volatile will have either a zero collateral factor, you can't borrow against it at all, or a very low collateral factor. And on the flip side, anything that you're borrowing also has associated with it a borrow factor, and the borrow factor is just a kind of a value that determines how volatile is this thing when you're borrowing it. How risky is it to borrow this thing, given the possibility that it might shoot up, say, 100% in a day. If something can shoot up 100% in a day, then if you're depositing $1,000 worth of the collateral, then clearly you don't want to be allowing somebody to borrow, say, $900 worth of this very volatile asset, because it's not that unlikely that they might end up with $1,800 worth of debt after one day. So you have to essentially curb the amount of asset that the user can borrow when the asset they're borrowing is very volatile. And how is that done? It's it does require, unfortunately, some kind of knowledge of the system and some analysis that's done off chain. It can't be done purely algorithmically. I can explain why that is in a moment, but essentially, it requires analysis of the assets that are actually being used, and then those kinds of factors are modified in the protocol through a governance module, where essentially users of the protocol that hold the protocol's governance token can have a say in what those risk factors are, and whether or not they should be just adjusted up or down to decrease risk on the protocol or increase the efficiency of capital.
Is it as simple as a number, like 0 to 1, where it's like, this is the trust factor for this cryptocurrency? Exactly that, yeah. It's all encapsulated in this very simple parameter for each asset. And generally the way that Euler does it is, in this, I don't know, I'm curious also by comparison how other exchanges do this, but it's just kind of set by people's, it's like a voted on opinion of how stable. Is that effectively what people are saying? How stable is this currency, or how much can we trust its future volatility? Yeah, that's one of the major factors. There are a few other things as well. One is what's called liquidity, which measures for a collateral asset, you're going to want to be able to repay somebody's loan on their behalf in the event that they're at risk of, the price has changed, they're at risk of being unable to repay. You're going to want to have somebody sell their collateral on their behalf for the borrowed asset and repay that loan. So in order to do that swap, there needs to be liquidity in the collateral asset that can be used to purchase the borrowed asset and repay the loan. So you need very liquid markets as well for things that are going to be used as collateral. That's a key consideration. Another one is how easy is it to manipulate the price of the collateral asset? If it's people that are borrowing against collateral are opening themselves up to various risks. One is the risk of what's called liquidation, which is where the prices of the assets that you've deposited as collateral and the things you're borrowing change, such that you're at risk of not being able to fully service the loan that you've taken out anymore. And so what you really don't want to happen is for somebody to be able to come in and artificially lower the value of your collateral by, say, 50% in a kind of shock crash in the collateral asset. If they can do that, they can drive and force everybody into liquidation all at once, and that could be very profitable for them and very costly for the people with loans. So in general, you want these collateral assets to be extremely liquid, resistant to price manipulation, and generally have low volatility as well. It's interesting. Have you thought about creating or building this in a way where the lenders can set their own subjective views or subjective like borrowing factors? I don't know if that's technically feasible, because you'd have to like have it'd be more, instead of a pool, it'd be more of a individual lending offering experience. But does that make sense, or had that come up in conversation? Yeah, in fact, this was one of the first lending protocols that was deployed on Ethereum. Was called ETHLend, which people may now know as Aave. And Aave before it moved towards the same kind of model that Euler now uses, and another protocol called Compound uses, which we usually refer to as a peer-to-pool model, because it's not peer-to-peer. It's there's a pool of capital that's shared by the depositing side.
Aave, the original Aave or ETHLend used more of a peer-to-peer method. And in that approach, then all these kind of parameters could indeed be set by the individuals participating in the loans. The problem with that was, I think they found possibly they went to market too soon. There wasn't necessarily huge demand at the time when ETHLend was launched. I think it was back in 2017. But the other problem is it's really hard to kind of do peer-to-peer approaches. You have to actually go out there, find a willing borrower, then you have to match the capital amounts that you're interested in. You might be a willing borrower with the parameters I've set, but only have only be interested in taking 5% of my my deposits. So that's kind of annoying. I've now got to go out there and find more borrowers.
Right.
And then you might want to borrow it for a year, but I might only want to lend it for a month. So we have to match all these parameters up, and it turns out to be really inefficient. If you look in the real world or the traditional finance world, that's why banks exist, really. They kind of manage all this messy thing. Banks are really kind of like peer-to pool type models as well. The depositors come in, we deposit in this big pool, and then the bank then allocates it back out to the borrowers. So, these intermediaries in the real world, I suppose, are acting as a pooling mechanism as well. It's just that it's not automated. So you do have these intermediaries, shaving things out of the system. And that's one of the major benefits, I suppose, of an autonomous system like a protocol is that it is disintermediated. There's no cost associated with the protocol having, offices or having to pay costs for, bankers and other folks.
Yeah, that's true. But there's also the downside that you have to put up 100% or more of the collateral to borrow. So it does. I mean, that alone, when I explain this to people who are not in crypto, it's like it's such a limp response. People are like, oh well, why? The question is, why would I ever use that? And then you have to explain. Well, there are reasons you would want to use that if you're in trading or if you want to get access to another asset quickly. Like there's uses, but they tend to be like crypto specific uses. Whereas people think of borrowing and lending as something I want to borrow and then pay back over time, which I mean definitely makes banking significantly more valuable in that sense. Do you see, I have to believe it's just a matter of time before there's a structure to truly borrowing on chain. Do you see this being tied to the integrity of a credit system or in some way? I mean, the way that it happens in traditional finance is, I mean, it's effectively tied to if you boil it all the way down, it's tied to like judges and prisons, and fines and bankruptcy. So it's like there's a real price to pay if you don't pay back this loan. And people know that, and they know that because of this, I can't just disappear. Whereas crypto, you really can, right? There's no central authority. There's no prosecution that's going to come after you unless it's off chain. Is there a pathway you see to enabling on-chain crypto lending without 100% collateral at some point in the future?
I think there is, although I don't think it's going to come from some kind of fancy technical solution. I think if it was, then maybe that solution would already exist in the traditional finance world. The solution that exists, as you mentioned, is essentially when you're borrowing under collateralized in the real world, is you're staking your reputation on as collateral and saying, I'm a credit-worthy person, I will repay this loan, and if I don't, you can threaten me with a court order or something. And so it's really a system of cooperation that we have running in the ordinary world, and the cooperation works because people are identifiable and they're accountable for their actions. And when you can't identify people and can't make them accountable through enforcement measures, it becomes much, much harder to have a system where you can have under-collateralized lending taking place, I think. So I personally think it's going to be a massive challenge. You have to have, if it was just based on, some people think, this, maybe we can, if everybody has an online identity, a decentralized identity, that they can somehow use and stake that as their reputation, maybe that would work. But even in that system where you've built up such a fantastic reputation over many, many years of repaying and so on, I think that reputation always has to be worth a lot more, significantly more to you than the amount that you're borrowing. So it still has to be over collateralized, but now we're having to build up this reputation in advance. And even then, of course, identities can be transferred, right? If it's based on address. I think, Vitalik had a thing recently where he was talking about this, about having non-transferable kind of identity that can be tied to an individual. And that's really important if we're going to have this kind of, this kind of under collateralized lending, I think. But overall, I'm a bit skeptical that there'll be a technical solution. I think if we do see something emerge, it will probably resemble what we have in traditional finance today. But the asset being, lent out will just be a tokenized asset rather than pounds. It will be some kind of tokenized pounds or USDC rather than USD.
Yeah, it would seem that, the one very immutable thing in life is your body, your physical body. You can't just transfer that. You can transfer your address. You can start a new address quite easily, but it would seem that it has to, to me, it boils down to two things. One is it has to be difficult to transfer, like very difficult to transfer and effectively fraud your reputational identity. So for me to go and apply to get a bank loan as you, right? If I were to say I'm Michael Bentley and I want to take out a $50,000 loan, like it's difficult. Like I would need to have all of your documents. They probably have a massive fraud team that they're tracking my IP, tracking all the things that they possibly can. And still, I'm sure it happens sometimes, but it's, I would imagine, pretty small. Then there's also the risk of doing it and getting caught. So there's like can I technically do it? And then if I do it and get caught, what price do I pay? And then you're kind of up against, like, at least in the US or Western countries, you're up against the government and their prosecution of you. And they're generally pretty aggressive with that kind of thing. Anything related to like money fraud, tax fraud. So it's like a pretty high likelihood of going to jail. And I think that scares the shit out of people. Ultimately, like being trapped in a box is like, that's the losing state. That's like, if you take anyone in finance, like game over is you're trapped in a box. And whereas
that's it.
Yeah, that's it. So that would seem like ultimately, I don't see how else it boils down to anything else when it comes to under collateralized lending than that. Like that has to be the bottom line. Otherwise, what is there? I don't know.
Yeah, I think I'm maybe as someone working in the industry supposed to come on and sort of pretend that I think there might be some kind of, blockchain-based solution, but the blockchain doesn't solve everything in this particular case. I think the existing systems are the ones that already have been proven to work best. We're kind of stuck with them, unfortunately, for better or worse. Yeah.
The other, I suppose slightly less worse than being trapped in a box going to prison is being excluded from the financial system entirely. In many ways, right, that could be worse, where you're like, it's interesting, kind of in today's world, we think of the means of punishment as entrapment, where we put people in prisons and we debate how long we put them in prisons for and have a judicial system to do that. In the ancient Greek times, they would banish people. They'd have a polis, which is their town, but it's also their family, their religious affiliation. It's everything that they care about. And as punishment for people, they wouldn't put them in jail. They would kick them out of the polis, which actually is the word for cosmopolitan, where we get that from. So it feels like if there were to be a kind of very low or under collateralized lending process, the repercussions for not paying that back would be to be kicked out of the pool with no means of getting back into it. But either way, it's interesting to debate, because it does feel like if someone were to at least make progress on that in some way, it's such a massive opportunity.
Yeah, there is some ideas knocking around about that kind of resemble what you're mentioning there. Like, I like the analogy with the polis. I think in hunter-gatherer tribes as well, one of the things they do there often is if there's someone that's just really problematic and they can't kind of get them under control, they exclude them from the tribe, and that can be life-threatening, right? Being in those kind of environments. So it's a major punishment, and it's very effective apparently. And this is true across the natural world as well. Enforcement mechanisms in cooperative systems are really, really common. Often, animals will have their own forms of kind of enforcement, a collective enforcement over non-cooperators, individuals that are kind of trying to cheat the system. And that's what you're effectively doing when you're walking away from a loan that you've promised to repay without, and not repaying it. You're kind of cheating an otherwise cooperative system that's designed to benefit the group as a whole, and you're kind of cheating and free riding on that. So those kind of enforcement mechanisms, maybe in groups. It depends whether or not you have functional groups that are then more beneficial for members than they are for individuals. That maybe you'd be part of a DAO that's super beneficial to you. It provides you all these wonderful benefits. And if you don't repay your loan, then you lose your reputation, you get kicked out of the DAO. Maybe something like that could work, but I don't know if we have any examples today where DAO membership is so valuable that people would be willing to not to default on loans and such like.
Yeah. There would probably have to be a credit limit. You could only borrow X amount of dollars, just like there is in traditional finance. I can't take out $100 million of loans. I can't personally do that today. And you incrementally increase your credit limit, which conceptually makes a lot of sense. So I would imagine the similar kind of implementation could be done on chain. Then there's also the exclusiveness of access to capital. I think you'd have to have either communication between pools where you say this person is like blacklisted, or you have a reputational communication between pools to say this person didn't pay back the loan. Otherwise, you kind of have like just a repeat offender just going around to all the different neighborhoods and committing the same acts. And then, of course, going back to the idea of not being able to reproduce your identity over and over again. They seem like solvable problems. I mean, they're not specific to crypto. Like Twitter has the problem of duplicate identity. Do they block people from creating multiple identities? And bots are a big problem in this. But it's interesting because it really does seem to like change the game if you figured it out.
It's a big problem, and I saw the debate around the bots recently, and it looks like maybe the only solution here is just to have a team of people that go out and kick them out. And so Elon Musk mentioned this. It's like, how do you solve the bot problem? You just hire 20,000 people to just go out there and find bots and kick them out. It's not very elegant. It certainly wouldn't work on scale on a blockchain, right? So we don't have those kind of automated systems that we would really like to see. If there was just some algorithm that could figure this out for us, then great. But even behemoths like Twitter don't seem to be able to completely solve this. It's still a bit of a mess, if we're honest, with the bot problem and the people out there.
To me, it's just, it seems like it's a hardware problem. Like we're talking about, there's three domains that we're speaking about. We have the strictly software realm, the digital realm, which information is stored on bits and gates. And then we have the hardware realm, which is like your mouse, your screen, your keyboard, the way that you interface. And then you have me, I have my physical body and the world around me. And these three, the hardware is the gateway. It's like the threshold into the digital realm. And I think to me, I see, what is it called? Bioinformatics, or the, retina scans, the fingerprint scans, the ways that they can, Apple has this on every device now. I just look at my phone and it opens up. And that's so common that it would seem like, okay, if Apple is going to like completely dedicate themselves to privacy, which is their number one value system that they subscribe to and build their reputation on. And they also use, is it called bioinformatics or biosecurity? There's some term for it.
Bioinformatics is, I used to work in bioinformatics. That's an industry. Although I suppose, it's really that bioinformatics, usually the study of genomes and genetic information, DNA, that kind of thing. Biometrics, I think.
Biometrics,
like scanning your eyeball. So there's this crypto project, right, where they went around, they said, okay, people can fake, their identity on chain. They can create new addresses. It's called the civil problem. How do we avoid this? And they were like, we'll just go and scan everybody's eyeball and then give them some tokens based on their unique eyeball scan.
Yeah.
And, it's kind of a little bit creepy, right? I think.
But but it also it seems to me like it's just as creepy as a public address. Like if I could see if I encoded the shape and color and patterns of your eyes and I put it in a 16 character token, I'm not going to know it's
Yeah.
you.
No, that bit I could live with, but the standing there in the little booth while somebody, some kind of government agent scans my eyeballs, the bit where I get a bit uneasy, I think. Who's creating that system? Because you could have a system, right, where without the eyeball stuff, like we have these security keys now that people use for logins and stuff. If you had just one kind of controller over the world, they could just send out a unique security key to every individual, and then that's your identity, right? But there's something very, very kind of unsettling about that. In my mind, anything that relies on somebody from the outset sort of controlling the system, some centralized authority that has to kind of be in charge of scanning the eyeballs or sending out the keys. That's where we run into problems, I think.
Agreed. Yeah, it'd have to be some kind of open source algorithm to do this, where you're agreeing to participate on this biometrics protocol, and it's just encrypted. Scanning is like an encrypted. Everything's open source and encrypted. Would seem like the way to do it, but maybe it's an evolution for Euler.
Maybe. It would be quite a big one, I think. I'm going to leave that to others, I think, and focus on the DeFi stuff. And two things I want to get into. Let's talk about this for a minute. So you spent a lot of time writing and building this dynamical systems theory for natural selection. And I was diving into that, and I find this concept super fascinating, specifically abstract from an abstract perspective, the patterns of nature that we can then understand and see play out in public markets or crypto markets or other places to better understand what's going on and making sense of them. How did you go about this study? Did you observe for long periods of time naturally occurring animal species or other species, or are you looking more on like a lower level biological, like the chromosomal level, and observing that? Or what was kind of the basics of it? So this was for my PhD thesis that I did at Oxford. So I actually started. This was more of a maths-based study in the end, maybe maths and even philosophy, I would say. But I started my sort of academic career as a bona fide biologist, going out there studying actual biological systems, and slowly but surely kind of started to abstract away from that and started to think about more general properties of biology and the way that natural selection shapes the world through evolution. And I was particularly interested in this. There's this one problem called the problem of cooperation, which is, given that natural selection seems to be like a fundamentally selfish process, it favors selfishness above all else. Things that outcompete others do well, and usually selfishness pays rather than cooperation. How does cooperation emerge in the natural world? In what context does natural selection favor cooperation? Turns out to answer that question, you have to be able to study systems on multiple levels. And what I mean by this is that you have processes going on kind of different timescales at different levels in terms of replication. So we have, for instance, genes within a genome replicate. They'll make copies of one another. Genomes within a cell will replicate and make copies with one another. Cells will make copies of themselves. Cells form bodies. Bodies make copies of themselves. And in some weird cases, even kind of bodies and individuals kind of form groups which themselves make copies of them, of themselves. For instance, groups of honeybees in some sense can be are often described as a superorganism. You can maybe think of them as like a body where all the individual cells just kind of fly off and then come back from time to time, which is a kind of weird way to think about it. But ultimately, there are all these different levels of selection. It turns out at any level where you have some form of replication going on, you have copying with some errors, you end up with a selection process taking place. And it turns out when you have multiple levels of selection, selfishness at one lower level can often drive more cooperative type emergent properties at higher levels of the system. For instance, there's this book called The Selfish Gene by Richard Dawkins, where he talks about the process by which selfishness among genes, so competition among genes within a gene pool, can lead to cooperative behaviors among individuals like humans with relatives and so on. So my thesis was really around how do you abstract all of this and make a unified kind of mathematical theory about how these processes of changing frequencies of things, if we just abstract them and call them things that replicate, how do you link that to this process by which there's kind of adaptation and improvement in the system in some way? So things evolve over time to appear designed as if they were there to perform some kind of behavior. And so, I was looking at how to combine how to make a unified theory about how replication happens at different levels, at different time scales, and how that leads to the appearance of design and adaptation in the natural world.
Wow, super interesting. And so, do you feel, in conclusion, that there is a consistent or a pattern to the rate at which different levels communicate, for lack of a better word? Like if there's a selfish behavior on one level, very selfish behavior on one level, would that mean that on the higher or lower level, then there's more of a cohesive nature to the interaction of things?
Yeah, you usually have to have well-formed groups in order to get sort of cooperative behaviors evolving and working well. Oftentimes it requires what's called relatedness among the lower level entities. So usually when you see cooperation, for instance, among humans or among other animals, oftentimes you'll find that individuals tend to cooperate with their neighbors who are their relatives. And so there's a strong tendency towards family groups. And the reason for that, it turns out, is because if you're foregoing some opportunity to benefit a relative, there's a high probability that relative also shares the genes for that kind of cooperative behavior. And so on average, you end up not with a zero-sum game, but with a positive sum game, where if you keep helping your relatives that also carry the genes for being helpful, eventually those helpful type genes will end up spreading through the population. Families of individuals who help one another tend to outcompete families in which every individual is selfish. And so, that's a general principle that I think unifies the kind of subject. It's called inclusive fitness theory. If anyone wants to go and have a broader read about it. But
have you read Jonathan Haidt's work on group evolution? He finds a very similar thesis of like humans. His basic theory, which I think is in contrast to maybe Dawkins or even going back to Darwin, that instead of an individual evolving the features that they have in isolation, there's a large group evolutionary dynamic that happens. So whether it's physical features or more abstract behavioral consistencies that evolve in groups, that it's the group that is evolving. And he would give examples like if you have a tribe over here of 200 people and a tribe over here, one tribe who is more cohesive in their hunting strategies, that they work together, they sacrifice for each other. There's different traits that evolve that sacrifice the individual but benefit the group. I could even think of like the argument, I think he makes this argument that the evolution of roughly 10% of the population that's gay is an evolutionary adaptation to group evolution specifically, because those people would be dedicating their resources and their energy not to their own offspring, but to the support of the rest of the group. And there's other examples like that, but it's interesting to think about it in that context or that lens, because it makes it make more sense, at least to me.
Yeah, it's a very controversial area. I mean, a few different things you mentioned there are kind of controversial academic subjects. Group selection theory, in particular,
is that something you've studied as well?
Yeah, in fact, that was I dedicate a whole chapter to this in my thesis. Group selection theory, is still controversial to this day for some reason, and it was made particularly controversial by Dawkins and others in the 70s, I think. because there was some very sloppy academics prior to them that kind of made outrageous claims and performed experiments that turned out to yield strange results. Like there was this idea that, for instance, lemmings. Do you remember the game from the 80s and 90s?
Yeah.
The lemmings game, right? There was this idea that lemmings would sometimes sacrifice themselves because of overpopulation. So the idea was that you have this island with all these lemmings. There's not enough grass to eat anymore, and so one lemming would just go, "Okay, guys, I'll take the hit. I'll jump off the cliff." And there's actually a nature documentary, I think, from the 60s showing or purporting to show lemmings jumping off cliffs to benefit the good of the group. It actually turned out that cameramen were kicking them off the side of the cliff.
No shit. Wait, what are lemmings? What is that? I always think of it as a
They're like a small rodent. I think, like a mammal of some sort. Yeah, but they are like from the game, right? And then the game emerged from this. There was just this rumor that emerged from somewhere, an old wives' tale that lemmings would do this. And so the cameraman went to observe this behavior, and of course, none of the lemmings were doing this. And said, what are we going to do? We need some footage. So it was like, hey, John, watch this. And he starts booting lemmings off the cliff. And then people see that. And then this idea of group selection theory, kind of grew more prominent and turned out to be very sloppy. There are very rare circumstances in which natural selection actually takes place at the level of the group. And the one that you mentioned about whether, there's group selection on human tribes is still really, really controversial. It depends on lots of environmental factors. Things like the rate at which individuals leave one group to join another group. If you have lots of intergroup mixing, then unfortunately you have lots of kind of gene flow between the groups, and at that point the group selection turns out to be on a kind of mathematical level an extremely weak force. And it turns out that natural selection on the individual level, on the person basis, is the one that takes precedent over all else and favors generally the kind of behaviors that it would favor anyway. So, super controversial. I don't really subscribe to that theory about group selection on humans too much, but I do think that probably back in the 70s with when Dawkins was being particularly critical about group selection theory, that it perhaps swung too much the other way. That group selection theory as a topic was kind of rubbish and people shouldn't study it anymore. And I think that was probably did damage to the subject of evolutionary theory.
Yeah, everything you said makes sense. I mean, the rate at which people would go, not necessarily people, but any species would go between groups dissolves the concept of the group, dissolves the competitiveness of the groups, I imagine. If you have limited resources and you have 5 tribes, like, I imagine in that situation, the tribe who wins is going to the people who branch out of that tribe and act individually are going to lose. With like either it's going to happen faster or more intense than it would be to act as a group. I sort of think of this as in the realm of in today's world, like ideologies. If you could have a political ideology, you could be part of a religious group, you could be part of a company, and these groups are advantageous to the individual to participate in because they're able to move. They're able to act in more power than they would if everyone were acting individually on their own accord. So I think that that to me makes a lot of sense. That by getting together, 20 people together acting in one direction can do much more than individually 20 people doing their own thing. And I wonder how much of it is, I wonder how much of it plays into today's world, whether it's like the way that people get together and form value structures to make changes politically or to make changes in the world by starting companies. I mean, do you see from some of your work some of the lessons or some of the concepts playing out in today's world? Do you see them with a particular lens that you think other people don't appreciate?
In terms of, cultures and the kind of benefit of a culture, I think it really clearly is beneficial for people to feel part of a group. I have I suppose, slightly envious of people with a religion. I can't bring myself to have a religion. It just makes no sense to me. But But people who have a religion, I look at them and think that there's a a nice warmth in that. There's a nice feeling of group participation that I think people that don't have a religion, need to find some other kind of, belief system and structure to form part of. Mm-hmm. So I'm slightly jealous and envious of those kind of systems, and they're clearly beneficial. People that have that have community. They have a more, greater sense of purpose often, and so yeah, it's definitely beneficial to be in groups. It can and have a shared group culture and view of the world, even if that view is wrong. It can still be extremely protective to kind of share that view. So yeah, I think that's probably a problem for the world as we grow bigger, and with globalization and things. And I suppose with the advent of the internet and social media and everything, we all thought that information and kind of facts and truth would spread more freely. And there was, the Arab Spring, and everyone thought, oh, this is great. All these kind of lies that we tell that groups were told in the past will all kind of dissipate. But in fact, it seems to have gone the opposite way, right? Like groupthink seems to have become stronger than ever.
Why do you think that is?
People are very I think people are just very attached to the ideas that they have in their head and the groups that they participate in because of this cultural phenomenon of wanting to belong and be part of a group. So, there's just a lot of comfort in that, and it's very hard to self-reflect and change your ideas, right? If you really truly believe something, to really tell yourself truthfully that you were wrong and then have to admit that openly to the rest of the world, it's really difficult. Admitting that you were wrong to lots of other people, especially if you really express your opinions extremely strongly. Prior to that, it's extremely difficult to admit that you're wrong after that. Yeah,
and even that in and of itself is a to me it seems like it's a value system that we've inherited, right? If Michael were to say, "Hey, I used to be a believer in some gun law or Christianity or some political decision," and you say, I've realized that I'm wrong on this, and this is the information I've gained, and this is my new perspective. That in and of itself doesn't conjure up any, to me at least intuitively, doesn't conjure up any immediate moral response. And I think it's the labeling of that's good or bad is a value system that we've inherited as a society. You could see an example of this, by the contrary, in startups, where if you start a company and you give it your all and you raise money and you build a product and the whole thing collapses, like you would think that society would banish you for that, or you'd be scarred or put down. But actually there's this kind of, whether it's a consciously developed value system or whether it just kind of evolved in the group, at least in the Valley, in Silicon Valley, and it seems to be pervasive across the world of tech startups, there's an emphasis on like, hey, that's great. You learned something. You gained experience. Go back out and do it again. And I could see a scenario where that value system flips. Like, hey, you were wrong on your political view. Like, I could see a value system where we're like, high five. You've learned, and I even see this actually in many circles, really in tech, and that's largely where I am. But people will take in that idea. You can see that by the cliche. When you are presented with new information, I change my mind. What do you do? Do you keep the same opinion? And so I to me, it feels like we're correcting in that decision, in that direction of praising people who change their minds. But you're right. Like it's a gray area, and it's still kind of taboo in a way to publicly admit you were wrong about something. Depends how much people want to own it. Same thing's true for apologizing. Like, are public apologies accepted or not? Like, and this is the whole idea of cancel culture versus like what Joe Rogan did. He just was like, hey, I made a mistake. I'm sorry. I'm completely open with it. I'm not trying to hide it. And I think honestly, that's the anecdote. It's like, oh, that the shame doesn't work when you just completely take it on headstrong.
Yeah, it's really hard to do though, right? It can be extremely isolating at first when you kind of go back. You're kind of also voluntarily leaving a group and then trying to find a new group that you belong to now with this new belief system, and maybe they're not even that welcoming because they're like a bit suspicious. When you previously part of that belief system, and now what's going on? Why are you now joining us? So changing your mind and changing your belief systems are really, really tricky, and especially in the modern world on social media. If you put anything online, if I go and tweet the most bland thing right now, you can be sure that it will annoy somebody. And so you're going to get, especially if you've got a large following, you're going to get strong feedback regardless of whether what kind of decisions you make and what kind of viewpoints you express. So it can be really tough.
Yeah.
The cancel culture is an odd thing that I flip between whether or not it really exists, because it seems to me that it's also just a product of people now feeling confident yelling their opinion online. And so if you get mobbed by 20,000 people, shouting at you on Twitter, is that really being cancelled, or is it just other people expressing their right to freedom of speech? I'm not sure. It depends. It's really up to the person that does the cancelling, right, and whether or not they care what the people on Twitter think.
Yeah. Well, I think you're right. I think there's a ton of mob pressure that can happen on Twitter. I think of cancel culture as specifically the set of moral and cultural, societal expectations for what companies and organizations do in response to actions that people take and things that people say. So it's like if you were to do this action or say this thing, and it fits within this box of either like racism or anti-diversity or what else are we concerned about? Like gender rights or these kind of things. Like these are the things that society is talking about. If you're outside of the norm on that too much, then there's an expectation that the company or organization will fire you. The Me Too movement was encapsulated by this. Like if you did or said something outside of the expectations, then it's like, and if you don't, then know that there's a tsunami of people that will put pressure on the company. And this is the leverage of, I mean, it kind of goes back to, in a way, your study of the advantage of group evolution, where it's the group cohesiveness that enables it to gain power over companies like Google and Netflix and Apple. Who's going to put pressure on Apple? Like it has to be a large group, so people have to get together. And that getting together feels very imperfect, that you're kind of like subscribed on. At least with religion, there's a pretty explicit either hierarchy or written set of values, where when it's like totally grassroots, it's messy.
Yeah, it's super messy, and it can be a force for good or a force for bad, and it often depends, what you think about the individual issue as to whether or not it's one or the other. And often it comes down to being a corporate decision, right? No one's actually forcing you to fire person A because they did bad thing B. It ultimately comes usually down to a commercial decision. Like if we don't fire this person now, are people going to stop using our products? And are we going to be tagged with a bad reputation forever? So that's the power of cancel culture, I think, is the ability to force companies to make commercial decisions because of the power of social media, effectively. In years gone by, you could have had some, 50, 100 people in a city go, oh, that company, they've got this bad employee. They have no impact on the decision-making of that company. If the employee is really great, or there's some misunderstanding, or they've apologized and so on, companies under no real pressure to take any action. But in today's world, where people be really vocal and express their freedom of speech online, in a group, that can be extremely powerful and then really influence, corporate decision making. Sometimes for good, sometimes for bad. It's a really thorny issue, and I don't know. I can't see it really going away, to be honest. Yeah.
Well, I think the counteracting force is the sophistication of thought and clarity of communication by leaders of the companies. If they're caught off guard, if they're only thinking about their product, if they're not having these kind of conversations, frankly, internally or externally, and then all of a sudden something comes across their plate, like, okay, there's 5,000 people in the company that signed this petition that said we have to do this thing and fire this person. And then it's like, there's a strong element of fear, fear that the board's going to fire me if I don't make this move, fear that we're going to lose market share. Then there's also the conviction of having a clear direction that, Coinbase took by saying, we're going to lay people off if they talk about politics internally, and you could go and here's a severance package if this is what you're looking for. SpaceX just fired a group of people who internally sent out a mass petition. They're trying to get people to say that SpaceX is not a safe place for some people. And, they have a narrative around this. And they were, like the CEO is like, hey, we got to get to Mars. Like, this is all we care about. So like, we're a meritocracy. We're hiring the best people. We got to promote hard work. And like, I respect the clarity of what they are willing to tolerate and not willing to tolerate. And so for better or worse, I guess it's good to have diversity among different companies. Maybe that's a set of resistance.
Well, I suppose it'll show what, when there's diversity, there's selection effectively. I mean, that's the kind of, what I used to study was when you have diversity, then you have like selection processes. It start to take place. Like who do people want to work for? Do they want to work for a company where they take a really hard line on sharing these kind of polls, or do they want one where you can say anything you like inside the company? There's a free markets can be quite powerful in that regard. In the long run, it's kind of an inefficient process, and it can lead to a lot of heartbreak in the meantime. But over the long run, that's what should happen, right? Is people go, I just won't work for this kind of company because I can't take it. I want to work for a company with these values, and they move company. And those companies with values that people generally ascribe to will tend to flourish because they hire the best talent. So the free market can solve this, but it's definitely a slow and inefficient process in many ways.
Sounds like a dynamical system of natural selection.
There you go. Yeah. I really think it is. Yeah.
Yeah. I mean, the free market probably most closely represents the most transparent and quantitative measure of evolution that we have as humans, right?
Well, the natural world is the ultimate free market, right? I mean, it's they say nature's red in tooth and claw. It's it's a fight out there, and it's the freest market there is. And I suppose some economists would argue that in many respects, nature has produced some of the, is also extremely efficient. And that's one thing that you can say about nature, is that it does produce efficient results, in the sense that you take any organism right now and go and tweak it in some way, just randomly, go and, take a finger off or just kind of like move a body part around. You'll almost always make something worse than better. It's really, really hard to create the kind of heavily optimized and well adapted things that we find in nature. And so in that sense, natural selection has been extremely powerful at bringing about those optimizations. But it's also a really slow and inefficient process in many ways. It's taken 4.5 billion years to generate the kind of diversity and optimization we see now. And oftentimes in economies and in policies and things, you want to go from, you don't want to go from A to B to C. You want to go to like the optimal solution a little bit faster than that. And we can often use our intuition and our ideas about the world to try to probably influence things. So I'm not a wholehearted sort of free market advocate, to be honest. I do think we can sometimes do a little bit better by adding some guardrails around systems, but there's no doubt that it's that it's a powerful force over long time scales. Yeah,
it's the trippy self-awareness that humans have in our own dynamical system that makes effectively the rubber meets the road on politics, right? Where we could debate this and kind of use our collective democratic views on things, but then it's like, what are we going to do? What gets inscribed and coded into law? It's how do we learn from those past mistakes? It's fascinating. It's fascinating when you think about it through an evolutionary adaptation lens. And
we do this in building protocols as well. That's why I kind of like it. In natural selection, you often take in an evolutionary theory, you often take a heavily optimized system, and then you look at how it got to the way it is now. You kind of try to reverse engineer and say what kind of processes were involved that led to the evolution of an eye or some kind of type of behavior, for instance. And in decentralized finance, you're often doing the opposite. You're starting with some simple components, trying to build them in such a way that the end result is a very robust, hard to manipulate system that's heavily optimized. And you often end up thinking about lots of these thorny issues as well, like the much bigger picture stuff about how DAOs should run and how, whether or not people should have a voice in certain decisions or whether it should be immutable. Lots of stuff going on in DeFi as well.
Yeah. How do you think about this?
In reverse.
You guys are what 20 people or so? You've raised 40 million in capital. Is that through ICO or that? How is the organization structured now? Is there a private company that owns shares and then you have the token and the DeFi project as well?
Yeah, so I run a research and development company called Euler XYZ, and Euler XYZ, among other things, helped build a protocol called Euler, and so that's the way that it's structured. And I think a lot of kind of DeFi projects start like that. I think there's an acknowledgement that nothing can start decentralized perfectly. Everything always starts with an idea, and somebody that has to go away and build it, and then the hope is that you build something cool and put it out there in the world, and then it kind of takes on a life of its own and it decentralizes, and then that hardens the protocol to people that would otherwise come in and try to take control over it and kind of centralize processes. So yeah, achieving something, putting something out there that will naturally decentralize and not require constant input and intermediaries to get involved is really, really tricky. Very, very difficult problem. And I don't know if we've seen that many examples of it working perfectly yet, but it's a fascinating area to sort of watch evolve over the last few years. Yeah.
And did you guys take a straightforward approach where the 40 million went from, was that institutional, retail, or some combination of investors? And did that go straight into the token, or was it like some other, I've heard different combinations of like it was warrants or ownership in the development company?
Yeah, any investment we've taken has always been from institutional type investors rather than what people call retail investors, I suppose. A lot of the early investment came into the research and development company that helped us look at various, develop various products like the protocol itself, but also things like risk assessment tools, Oracle-based analyses, and stuff that you might be familiar with. And then some of the more recent kind of partners have actually put assets into the DAO structure itself. So they put digital assets into the DAO structure and to help the DAO itself evolve. And then those assets are obviously not linked to the company in any way. They belong wholly to the DAO and to the token holders that form that DAO.
So institutional, the investors would think of their payback as the growth in the token, or would they think about it? Is your ambition to build out the project and then dissolve the centralized company eventually?
Yeah, decentralization is always. I think there was a great article I saw a few years back from the guys at A16Z, and they said, decentralization should be a progressive process. And so that's really the goal, is to kind of progressively decentralize. So you build a protocol, you kind of it gets deployed by a small team of people, and then over time, other people get involved and kind of become guardians over the protocol. And chief among those is its token holders, who are protocol users. There's people call this the ownership economy, right? The token holders who've used the protocol get more tokens, which gives them a greater say in how the process works. And ideally, you have lots of token holders, so you get a diversity of opinions in how the protocol should operate. And they should have limited control over how the protocol runs, right? So that they can't come in and say, hey, Mike, I see you just deposited. I'd like to take that deposit and keep it for myself. Or, ideally they should have limits on what they can do. And in order, those limits are mostly around, risk-based parameters. So they can kind of tune up or down the kind of risks associated with the protocol. And then other people who use the protocol are free to look at the risk profile of the protocol and decide whether it's for them or not.
Gotcha. How do you measure your progress? Do you think of it as like a transaction volume on the protocol or some other measure?
Yeah, good question. I mean, you mean my personal progress or the progress of the protocol? I suppose.
The protocol?
Yeah, they're very different things. Yeah,
or your personal.
The protocol itself.
Yeah, whatever.
Yeah. I suppose from the protocol's perspective, really it's, it should be, it should have a relatively high borrow rate. I think that's a sign that it's working well, so that lenders who deposit assets into the protocol, those assets are actually being utilized in an efficient way. The capital is actually being used by the borrowers. Mm-hmm. So I think that's probably the best measure. A lot of other protocols, or you'll see a statistic called TVL, or total value locked, which is just a measure of, how much, what's the kind of value in some sense of the assets that people have put into this protocol. Mm. But I'm not a huge fan of that metric. It can be useful for certain things, but for the most part, it's just measuring unutilized capital. It's like how much of someone dumped into this protocol. It doesn't necessarily mean it's being used well or doing anything, economically beneficial. Whereas borrowing, I think, is a real sign for the most part of genuine economic activity, and certainly any kind of borrowing means some kind of benefit for the lenders as well. And that's the main purpose of the protocol, is to kind of democratize that process of being able to lend out assets and earn a yield on them.
I thought you had something to say on the personal side. Did you want to add anything?
Oh yeah, on the personal side, what would I say? I suppose. I just absolutely love learning. So I'm just learning stuff every day, and also changing my opinions on lots of things as well. I suppose through the process of actually building this thing, I find myself stumbling on how do you build DAOs, and then realizing that's kind of similar question to how do you build, a government or a country. There's lots of analogies that I end up drawing with back to the real world, and they end up shaping my opinions. I used to have more opinions about probably more pro-regulation than free market. I've always kind of had a bit of a mixture of opinion on those things, but I still do think there's a big role for regulations. But I now see more having to think about how to build a DAO and the structures and the ability to manipulate those things. I now have a greater respect for the argument that actually a lot of regulations end up being kind of poor, and they often have consequences that are unforeseen that impact other areas of a system. And so generally, I think my viewpoint there has changed and evolved such that I think that, we should try to keep regulations more or less to a minimum.
Yeah. Yeah, I agree.
So that's been quite a change for me.
It does. To me, it feels like regulations are analogous to the example you gave with, you're just going to add a finger to this animal right here. It's like, yeah, you can, if you don't want this animal to eat as much, if there's overpopulation of rabbits, like, okay, we're going to cut off a foot of 20% of the rabbits. Like, well, how can you possibly expect a incredibly complex system to react to a simple intervention? So yeah, long story short, I very much share your sentiment that there's a role for regulation, but it really should be incredibly pressured to be as minimal as possible, because we know there's going to be negative externalities to it.
Yeah, absolutely. And it's often impossible to predict what those will be.
Yeah.
We're talking about simple DAOs here, and even with DAOs, it's really hard to kind of, model the system and think, wow, things will change. That's how I've been looking at thinking, building a protocol, we'll just change this. And you ever so slightly shift the incentive structure, and suddenly I describe it as like a bubble in the carpet. You think, I'll just stand on that bubble. That's the regulation. It's like, oh, hold on, the bubble's popped up over there. Oh, all we have to do is put the pump on that. So you put the pump on it, and the bubble's somewhere else. Yeah. It's like you're chasing this around and creating new problems everywhere you go. It ends up being really hard. So sometimes, it's not always the case, but sometimes better the devil turns out to be, the right kind of approach.
Yeah, good analogy. Michael, this has been a lot of fun. Thanks for spending a few extra minutes here and going over. Congrats on all the progress of everything, and hope you guys keep crushing it.
Yeah, thank you. Yeah, I really enjoyed the conversation. Been touched on quite a few things I wasn't expecting.
Yeah,
so that's good.
Yeah. I want to ask. I like asking people: are there any particular people or books or blogs or Substacks or anything that you've learned a lot from that you wanted to throw out there?
I would say, Andreas Antonopoulos, if people are interested in reading his stuff, in reading about the fundamentals of blockchain and how you construct a blockchain and how you think about them from a philosophical but also a technical level. Those books are just brilliant. He's got Mastering Ethereum and Mastering Bitcoin. Brilliant starting point.
Awesome. All right, my man. Well, hope you keep on with the progress. Talk soon.
Thank you very much. Cheers.